Hello, everybody. My name is Martin. This is my take on this. There are talks about the economy, business, and finances. And today we're watching a video from Michael. He's a favorite YouTuber in the housing and economy market. He usually walks in the Florida region where he lives in Miami. However, he's right now in the California area. And let's see what he has to say about the current housing market.
Today I want to go through a lot of the different predictions that are out there from Realtor.com, from Zillow, from Redfin, and even from Fannie Mae about the direction of the housing market, because some of them are in alignment and some of them are in complete disagreement. And I'd like to give some of my opinions on all of this as well. Now, obviously, nobody knows exactly what's going to happen. And a lot of times whenever these predictions come out from Fannie Mae or from Redfin or whoever, they end up revising their predictions as new data comes in to try to more accurately predict what's going to happen. Well, right now, Realtor.com is predicting that home sales are going to fall to a new 30-year low this year in 2025. The revised forecast predicts that 30-year mortgage rates are going to remain higher than originally projected and are going to average about 6.7% throughout 2025 and maybe ending the year around 6.4%. Now, I don't like to predict mortgage rates at all because that's something that I think is completely unpredictable. But one thing I can tell you is a lot of these agencies have been saying that interest rates are going to go down by the end of this year. They said it was going to go down by the end of 2023. They're supposed to be at 5.5%, and we're sitting at 6.
Yeah, he's totally right. A lot of realtors and bankers, they actually said to home buyers over the last couple of years, oh, the mortgage rates will go down and you can refinance and then your monthly payment is no longer as high. That's just a flat out lie because, as he said, you don't know when and if mortgage rates go down. They might even go up. We actually have no idea. Even if the Fed would lower interest rates, the banks do not have to lower the mortgage rates just because of that. They might even go higher because they can make more profit with it. So we actually don't know. It's ludicrous and wrong to actually say, yeah, we'll go down in a couple of years. That's not right. And a lot of people fall for it. That's kind of criminal, to be honest, but it's what it is.
0.7 right now in the middle of 2025. So that just goes to show you how accurate these interest rate predictions are. But the thing that you really want to pay attention to is this interest rate prediction is actually up from their original forecast at the beginning of the year. They originally says that interest rates were going to be at 6.3% throughout 2025 and end the year at 6.4%. So as you can see, they revised these predictions as the new data comes in, and it's actually worse. It's worse than what they thought it was going to be at the beginning of the year. Kind of just like when they come out with all the jobs numbers, and then they do the revisions, and then they find out that, wait a minute, we gained 0 jobs when we thought we gained 1 million. The same.
I had to laugh about that. That's exactly what happened just actually yesterday when the new job numbers, the revised job numbers came out, and they were just so much worse than the job numbers a couple of weeks ago when they first came out. That is a real, we saw the stock market go down 1-2% easily, and a lot of people lost a lot of money on that day just because of these revised job numbers. Not as extreme as he says, from 1 million to 0, but it was actually not really much better. So yeah, it is like that, which I don't understand. Why don't they just wait till they have the actual job numbers? Makes no sense to come up with numbers up front just so because. So yeah, but that's how it is, and that moves markets.
Sales volume of existing homes was previously projected to grow slightly this year, but now it's expected to fall 1.5% annually to just 4 million transactions. So it is on track to be actually worse than it was in 2024. Okay? Last year, I even called this. I said in 2024, they were saying this is going to be the worst housing market ever. And then I said, just wait and see. Next year is going to be the next worst housing market ever. And lo and behold, now that we're halfway through the year, all these other real estate companies are catching up with what I said a year ago. And it was obvious, the writing was on the wall. There was nothing to indicate or any reason why there should be some miraculous recovery in the amount of homes sold. Affordability.
Yeah, maybe they watched his videos when he always said that. So they finally said, maybe he's right. So we just say what he's saying, right? It's kind of funny, isn't it? That one guy on YouTube knows more than all the big banks together. That's kind of funny. But you know, the main thing is for everybody out there, you just have to be critical of things and really look into it more detail. Don't just believe a realtor or banker when they tell you these numbers and information. Don't believe that. Their goal is to make money off of you. Your goal is to save money. So don't believe those things just because they were sued. That's not how this works. You have to look into the numbers yourself, calculate it yourself. Can you afford it? And all these things, right? So that's what he does. Just use common sense, which obviously a lot of people these days no longer have.
It's still at all-time lows and the prices are still at all-time highs. But the reason that Realtor.com likely thought that home sales would be higher than they actually are this year is because they thought interest rates were going to go down and somehow that was going to cause people to come back into the market. When in fact, interest rates have gone nowhere but up since the beginning of the year. So 2025 is going to mark the slowest year of home sales since 1995, when they registered only 3.8 million home sales. So we had 3 bad years in a row on record here, according to the National Association of Realtors, where home sales have been at 30-year lows. 2023, 2024, and now 2025 is going to be the worst one yet. 3 of the worst years in a row, guys. Going back to 1995, when the population was only about 2/3 of what it is today. That just goes to show you where the demand to buy a home is right now. It is basically non-existent. And I know a lot of you keep asking me to say where I am in the video. So today I'm walking in Mill Valley between some of these cross streets here. I couldn't tell you exactly where, but somewhere close to the Good Earth Market. So even with just as many homes on the market as we had before the pandemic, we're still seeing buyer demand non-existent. And that's because of prices. They always try to blame it on interest rates. They try to blame it on the economy. They try to blame it on the job market, which does have an influence, because if wages were keeping up with inflation, then home sales would likely be a lot stronger. But the real problem is home prices. I mean,
yeah, he's 100% right there. It's the home price. It's not the mortgage rate and nothing. Most people, to be honest, they don't really know what it means if the mortgage rate is 6% or if it's 4%. They know it's lower, yes, but what does it actually mean? How much less money do I pay per month? You know, is it 100? Is it 200? Is it 500? And does that really make them decide to buy the house? Yes or no? I don't think that's the case. The same with car loans. You know, they kind of then make it that the monthly payment will still be like in the range you actually can afford or can live with, right? And the same true with the houses. So it's not the mortgage rate, it's the house price. People look at the price and say, what, this house is like $800,000? That's just too much for this type of house, you know? And that to me is the main reason why a lot of people just, you know, say, no, I'm not buying. And greed, on the other hand, is the main reason why these prices are so high.
Even in markets in the South, like in Georgia, in Florida, Texas, North Carolina, we're seeing inventory surge back onto the housing market, but the demand still isn't there, even after home prices have been falling year over year, because that's a signal that home prices still need to fall by a lot more before most people are going to be interested in going back out there. And it's not even really a question of interest in many cases. It's a question of, I can't afford this. I cannot literally qualify to get this loan. So therefore, I might be super interested, but it doesn't matter because I cannot afford to buy. Which brings me to my next interesting prediction from Realtor.com. They think that home prices, despite all of this, will continue to grow by 2.5% through 2025, but they were originally projecting growth to be at 3.7% at the beginning of the year. So obviously that has got knocked down a couple notches. And like we talked about the other day, it doesn't really matter what the national median home price is, because we have proof in the data that the main reason that the median home price is going up on a national level is because the increased sales volume in the million plus side of the market. If it wasn't for that happening, we wouldn't be seeing these big increases in home prices still. And that goes back to my theory all along, which is that only people who are very wealthy and are very well off financially are the ones who are buying homes right now.
Yeah, that's always like the problem with those averages, like the same when they come out with the GDP per family or so. It's the same thing. It's way out of proportion. So yeah, obviously, if there's a lot of rich people that can buy houses $2-3 million and up, and they just pay cash because they have the money, that actually inflates the rest of the prices quite a bit. You know, overall prices might go down, but there are a couple of sales in the you know, $2-4 million range that kind of pushes the prices overall up in the statistics. So they should have statistics like for different price brackets, like houses between 100 and 200,000, 2 to 300 to 400, and so on. That would be a way more accurate number. But then, of course, you would see that, for example, the 300 to 400,000 prices go down 6%. And of course, realtors don't like that. They want to show that prices still go up to put some FOMO on the people. So they say, well, you know, I still just buy this house now, otherwise it might be gone. So yeah, that's yeah, they just want to make the money. That's all there is to it.
And that's pretty much it. Take a look at this chart here showing mortgage rates staying higher for longer. And it says at the bottom, this chart shows how mortgage rates have remained higher in 2025 than Realtor.com economists initially forecast in December of 2024 due to inflation and debt concerns. Because after all, the interest rates on mortgages tracks the 10-year treasury, and until inflation gets squashed, which looks like it's not going to happen, those rates are going to remain elevated or may even go up if the Fed opts to lower interest rates. But this is actually all very good news for would-be homebuyers, for people who've been waiting on the sidelines. Home inventory has surpassed 1 million listings nationally for the first time since 2019, and it's been past 1 million listings since May of 2025 now. So for at least 2, possibly even 3 months in a row, the July date is not in yet, we've seen listings at pre-pandemic levels finally on the US housing market. And all the economists, all the experts were saying, well, look, inventory is coming online. This means that buyers are going to be rushing out there. And everybody said this was going to be the hottest spring and summer selling season for the US housing market since 2021. And boy, oh boy, were they wrong. And Realtor.com has gotten specifically bearish on new construction. They're now projecting that single-family housing starts will actually fall 3.7% below the rate that we had last year. And at the beginning of the year, they were predicting there was going to be a 13.8% gain. So we're talking almost an 18% discrepancy on what they actually thought was going to happen versus what it looks like actually is happening. And they're also projecting that homeownership rates will drop slightly, down from 65.6% last year down to 65.2%, as less and less people are interested in owning a home at these prices and interest rates, and the existing homeowners who bought and now have buyer's remorse are looking to get out. Now let's take a look at Fannie Mae. Fannie Mae expects mortgage rates to end at 6.4% this year, which is exactly the same prediction as Realtor.com. Same exact thing. And they expect interest rates on 30-year mortgages to be 6% by the end of 2026. So not really a great improvement, even if that were to materialize, which at this point doesn't look like it will. Fannie Mae also predicts that home prices are going to be up 2.8% at the end of 2025, and then it's going to slow down to going up only 1.1% in 2026. So even Fannie Mae, probably one of the most bullish housing market predictions out there right now is saying that we're likely to see home price growth stall to a halt by the end of next year, even under the most ideal conditions, according to these guys. One thing I think they are way off on is the total home sales are forecast to end the year at 4.85 million by the end of 2025 and 5.35 million at the end of 2026. That number is just a joke, guys. I think Realtor.com probably nailed it at below 4 million or right at 4 million. And that's going all the way back to the low point of 3.8 million back in 1995. That is more likely to be the far more accurate prediction from Realtor.com than what Fannie Mae is saying here. This sounds just insane to me. Zillow is actually the only one of the bunch that's actually predicting home prices to go down by the end of 2025, which is funny because they're actually predicting that they think home sales are going to end the year slightly higher than they were in 2024. But so far, the data is not pointing to that happening. Zillow also predicts that inventory is going to continue to rise throughout the rest of the year, something I 100% agree with them with. They don't say by how much, but I would be willing to bet that we're probably going to close the pre-pandemic gap by the end of the year. Although one thing that would hurt that prediction is that typically in November and December, you see a lot of homes getting taken off the market due to the holiday season, but they come right back on the market a few months later after all the holidays are over and people start gearing up for the spring selling season next year. But Zillow is predicting that home values are going to end the year 2% below where they did a year ago. That's a big departure from Realtor.com and from Fannie Mae, who both think that home prices are going to go up by 2.5%, and Zillow is saying it's going to go down by 2% by the end of the year.
Yeah, I will link the full video below in the description. But yeah, so it's very interesting what he says and all the different predictions out there. Just to give you a little bit of an idea, during the housing boom in the 2000s, before the housing crash in 2008, they sold over 7 million houses a year. That's just absolutely ludicrous. And just think of it, that is already 20 years ago. So as he said, that's way less people, but sold way more houses. So overall, we are at a tipping point right now. And I just released a podcast from my take on this, with some information about that, where I talk about my experience in the beginning and during the 2000 financial crisis between 2004 2014, and my journey on wanting to buy a house. And I think we're on a similar position where people just say, no, we cannot afford it. The prices are just way too high. They don't make any sense. There's no reason why the house would be 40% more expensive than 4 years ago. There's just no reason. It's not that it has now a golden bathroom or 3 rooms magically added to it. It makes no sense. Overall, it's just greed. So these prices need to come down. Let's call them so-called investors. Even if it's just private people, they need to lose money on these houses, because houses are meant for people to live in, so that you have a roof over your head. They're not meant to make a shitload of money out of it. And I think that's what people just really forget. They just see houses as an investment vehicle to make a lot of money in a short period of time. And that's just wrong. So we'll see how this actually all ends up, what is happening in the near future, in the long run, if there is a bubble, if the bubble will crash. We don't know that. We absolutely do not know that. It might be a slow and steady downturn, which, as I said in my podcast too, would be kind of the best. So if it goes down maybe 2-3% over the next 10 years, that would be the best thing, versus if it would crash, like next year it crashes down like 20-30% at once. That would really hurt the economy. So we'll have to see how all that goes. But overall, it looks like there is not really a good, a good positive outcome for the housing market at this point. There's less immigration. We're deporting a lot of illegal people, a lot of Americans moving out of America. So there's quite a bit of challenge for the near future and the long future that we actually can fill those houses. The birth rate is down at 1.6, so we will have less and less people every year. The baby boomers are the ones that are now on the, well, let's call it the chopping block, because they're now gradually dying off, because they're now in their 70s and 80s, and they will just vanish away. So all this is happening, and with that, we will not be able to sell more and more houses and will ramp up prices. That's just impossible. So we have to keep all that in mind. And no matter what realtors and bankers and whatnot tell you, those are the things that are just not going to happen, right? You have to be realistic. You have to rethink that. You really have to think critical of these things. And you much rather wait a year, 2, 3, 4. It doesn't matter, you know. It's not that important to have that house right now. The house is still there in 3, 4 years. So just wait and see how things progress and then buy the house. Believe me, you will be better off with it. All right, so that's it for today's video. Thank you for watching. As always, like and subscribe. There will be more videos coming. And thank you so much. And I will see you soon. Bye.